Hello and welcome to this session on Chime. We will analyze the company Chime in more detail using the Canvas business model. Chime is a financial technology company that provides banking services in collaboration with their partner banks. The company has millions of customers and is financed with high amounts of venture capital. The company was founded by Chris Britt and Ryan King in 2012. It has its headquarters in the US in San Francisco with additional offices in Chicago and Vancouver. Since Chime is not a bank, they need to collaborate with banks to assure that their products and services comply with all regulations and banking laws. Chime therefore works together with the Bancorp Bank and the Stride Bank. Through these cooperations, all of Chime's products and services are FDIC insured. Besides that, Chime also works together with the necessary federal and state regulators to safeguard their customers' money and fulfill all financial and non-financial laws and regulations. Other key partners of Chime include, for example, Apple Pay and Google Pay. Through these cooperation, Chime can offer its members mobile payment services in combination with their cards. There are for sure numerous key activities that could be listed in connection to Chime. Here, however, a focus is to be placed on what is probably one of Chime's most important tasks: protecting its members' personal information and money. Chime has teams of cybersecurity, anti-financial fraud, anti-money laundering, machine learning, underwriting, and analytics. Chime's work is audited by its banking partners, with which they work to resolve possibly upcoming problems. Chime mainly offers its customers three products. The Chime checking account is the first product, which is a prerequisite for the other products. Through the Chime checking account, customers receive their Visa debit card. In addition, customers have the possibility to open a savings account and a so-called credit builder at Chime. All these products are designed to pursue Chime's mission, namely to help their customers obtain financial peace of mind, with a specific focus on people that are frequently not well served by traditional banks. But how exactly does this set Chime apart from other banks and fintechs? Banks and fintechs contest on several value propositions, including, for example, interest rates or customer segmentation. Chime tries to generate the greatest possible value for the customer by providing its customers with as many features as possible. What exactly these features are and how they generate value for the customer will be elaborated on the next slides. Therefore, the focus shall first be placed on the features that are included in the Chime checking account. Chime's customers can send money via the app. Thus, Chime offers the function of a peer-to-peer payment app. When the money is sent to Chime members, they receive the money immediately. If Chime customers send money to non-Chime members, the non-members have 2 weeks to collect the money by entering a valid debit card. Moreover, Chime customers don't pay any fees for the checking account, and there are no minimum balance fees. Furthermore, there are no fees for Chime's ATM network, which with 60,000 ATMs as of 2022 is larger than the ATM network of the three largest American banks combined. There are also no overdraft fees on the debit card if the customer qualifies for SpotMe. This feature allows customers to overdraw their debit card by $20 to $200 without having to pay overdraft fees. Chime decides if the client is eligible for SpotMe based on his account history and activity. Thus, the customer cannot increase his SpotMe limit by himself. The negative SpotMe balance will then be settled from the next direct deposit to the Chime checking account. Another feature that Chime claims to have benefited many of its users, especially in the corona pandemic, is the Get Paid Early feature. The employer of the Chime customer only has to fill out a form and the customer is able to access his salary up to 2 days earlier than with normal banks. In the corona pandemic, Chime leveraged the idea behind this feature and provided its customers with faster access to government aids and tax refunds. Chime was frequently able to transfer the money up to 5 days earlier than normal banks. In addition, the other two Chime products should provide additional useful features. The Chime savings account is a high-yield savings account that requires no minimum deposit and has no fees. The only requirement is a Chime checking account. The funds of the Chime savings account, like with all Chime products, held by FDIC-secured banks, and the interest on the savings account are added monthly. These interest rates apply as variable interest rates, which means that the interest rate can vary over time depending on factors like changes in market conditions and rates. Furthermore, there are saving features included like roundups. With this feature, every transaction the customer completes with his Chime debit card is rounded up to the nearest dollar and the rounded value is transferred from the Chime checking account to the savings account. It is also possible to save a percentage of every paycheck automatically or transfer money directly from the checking account to the savings account. Transfers from the savings account to the checking account are possible as well. Chime Credit Builder is the last product that contributes to Chime's value proposition. It is a credit card designed to improve the credit rating of customers. There is no credit check for this credit card. The only requirements are a Chime checking account and at least $200 in direct deposits each month. But how does it work exactly? At first, the customer has to load money from his checking account to his credit builder. This is the amount of money he can spend with his card. How much money is loaded on the card has no influence on the credit rating. The card can be used anywhere credit cards are accepted. The money loaded on the credit builder will then automatically settle the balance on time. Chime reports to the 3 largest credit bureaus and thus improves the customer's credit rating over time. To provide its customers with its value proposition, Chime possesses some valuable key resources. Chime's mobile application provides many features like notifying for transactions, checking for a free ATM location, or depositing a check to the Chime checking account. It is also possible to deactivate card transactions via the app if the card got lost. Since Chime is planned to be mainly used through the mobile application, the app presents a valuable key resource for Chime. Concerning Chime's customer relation, Chime's goal is to make everything as easy as possible for the customer. For example, setting up a Chime account only takes about 2 minutes, in which you need to enter some data and 7 to 10 business days later your Chime debit card arrives. Also, Chime's various features underline this goal of simplifying the customer's finances. Chime might additionally aim to strengthen its customer relationships through actions such as paying out government aid earlier during the corona pandemic. But which customers does Chime mostly attract with its customer relationship? Chime's customer base consists of mostly low to middle income customers. As fees at Chime are low or mostly non-existent, and the app provides a good user experience. Chime also largely focuses on young people and generally on people that struggle with the costs and higher barriers of traditional banks. The main channel of Chime is their app, whose importance has already been discussed. Interesting is that despite Chime's relatively young customers, Chime spends a lot of money on TV advertisement. In 2019, Chime spent $48 million on an annualized basis on TV advertisement. This accounts for nearly a quarter of Chime's revenue in the respective year. After having taken a look at the benefits of Chime for the customer, we will now take a look at how Chime earns its revenue. Part of Chime's revenue comes from ATM fees customers pay when withdrawing money from outside Chime's ATM network. As of 2022, this costs the customer $2.5 per withdrawal. Another source of Chime's revenue is interest on cash. Customers deposit their money into Chime's savings account. Chime then lends this money on a short-term basis to other banks or financial institutions. For these loans, Chime receives interest on cash at an interbank rate which is higher than the interest Chime pays its customers. The interbank rate is the interest rate for short-term loans between US banks. Those loans are usually overnight and normally do not last longer than 1 week. In the interbank system, banks can borrow money from other banks or lend money to other banks depending on their current liquidity needs. However, Chime's largest source of revenue comes from their interchange fee model. These are the fees that partner merchants pay for processing payments through Chime's network. This means that Chime earns money every time a customer uses their Chime Visa card to make a payment at a merchant. Visa gets a fee of about 1.5% from the merchants. Chime then receives a share of those 1.5%. As a conclusion, there should serve a small pro and con list of Chime. One of Chime's positive aspects is the easy account opening process. However, some people may be reluctant to manage their banking affairs through Chime without the option of visiting their bank advisor in the branch, since Chime, as an online-only fintech, does not have any branches. However, Chime offers 24/7 customer service, which is accessible via the app. Another criticism that came up in the media is that there were some customer complaints, as customers were suddenly blocked from accessing their funds and accounts. Chime has responded to those complaints by stating that these issues were caused by Chime's increased anti-fraud efforts during the corona pandemic. A positive aspect are the many features that Chime offers its customers. Let us finally repeat the key messages. Chime is a US fintech financed with high amounts of venture capital and millions of customers. Chime offers many different banking features for free that would normally not be available to everyone. Chime generally attracts young customers and people that are traditionally not well served by normal banks. Chime's revenue mainly comes from its interchange fee model, interest on cash, and ATM fees. In case you want to understand in more detail the payment services of neobanks like Chime, it would be also helpful to understand the payment market in general. You could have a look in the Paytech chapter in the book Fintech Business Models to learn more about alternative payments like PayPal, Alipay or Adyen. Thank you for your attention.